why not put your money to work?
Ladies and gentlemen, thanks so much for tuning into the Crypto Tape. I'm your host, Frank Chaparro, and I'm thrilled to have Tom Farley joining us on the other side of the mic, CEO of Bullish. Thanks so much for taking the time.
Good to see you, old friend.
Yes, I know. I feel like what I did that was so cool about this first shoot that we're doing for the new show is, and all the producers that are here have been saying, these guests are great. They've got so much chemistry with you. You're such an amazing host. I'm like, no. I've known most of these people in aggregate for like 50, 60 years, if you add up all the years together. And I'll never forget, you may not know this or remember this, but before I covered crypto, I had a very special beat at Business Insider. And this is before market structure too. I covered young Wall Street, which is kind of an ambiguous beat of like what you'd imagine 25-year-old sub, younger than, just getting their start in finance would want to read. And back in those days, we would do these slideshows at Business Insider, if you remember. And one of the first ones that I did, I might have still been an intern or an associate or whatever range they'd call it, was on the gym that you used to go to with Hugh Jackman in, I guess that was downtown, at the Dog Pound. And so that was before I even covered market structure. I had an introduction to the world of Tom Farley vis-a-vis the Dog Pound.
That's wild.
Did I ever tell you about that?
You never told me that.
So
I had no clue.
Can
I go back and like find this in like the Wayback Machine?
It's actually kind of hard to find. I think there's like a version of it sitting somewhere on like Business Insider India or something. So you really have to look for it. But the story of that was, first off, that slideshow did insane from an impression, more than any market structure story I ever wrote, right? Like anything on derivatives or, the market data wars. I think it got something like 1 million impressions, but I hit all it was all about headlines and images back then. So you get Victoria's Secret models, Tom Farley, Hugh Jackman in the same headline. And, but that whole thing started, right, with that guy who just would bring his dog around, and he was, big guy who like went on this like health fitness journey. And
I learned so much through that process, and a lot about celebrity, which is what you're describing, getting the 1 million impressions. But actually, I was at maybe like a 6-year-old birthday party, and Hugh's daughter was there, Ava, and my daughter Maeve. And Hugh was like, "Hey, I'm actually going to go to work out in your building. Do you want to join me?" And at this point, Maeve was 6, the twins were 4, and I had stopped working out. I mean, it was like all hands on deck. Every day was a battle just to make it from sunup to sundown.
President of NYSE at that point?
I was president. It was right at the beginning. We were in the process of acquiring the New York Stock Exchange, so I knew I would be going in to run it, but I was already working on the acquisition, insanely busy, 3 kids. My twins were nuts, still are to this day. And in order to, save the marriage, I put the golf clubs away. I stopped working out. So I was really quite out of shape. And here's Wolverine saying, "Hey, do you just want to get in the gym and get after it?" And so I said, "No, thanks." So I get home and I say to my wife, and it's like a Sunday afternoon, I have no other plans. And I said, "Oh, Hugh was so nice. He asked me if I want to go to the gym in our building." And she's like, "That's great. Like the kids are getting a little bit older. You should get back in shape." And I said, "No." She said, "Quit being such a wuss, throw on some gym clothes, go down." So we went down and we worked out together, and we ended up working out 6 days a week, every day for, 3 years. And Hugh would always bring his dog.
Oh, okay.
And his wife, Deb, and my wife, Molly, they would always say, "Oh, you guys are going to bed at 7 p.m. because you're going to go to your dog pound thing." And this trainer you're talking about is a guy named Kirk Myers who had started training us, and he was a lovely guy, and a few other trainers, the Pena brothers. And what happened was, and this is the lesson in celebrity, the moment you would say to somebody, "Hey, do you want to work out with me at 5:30 in the morning?" People would say, "Oh, thanks for asking, but I'll pass." Say, "Oh, I work out with Hugh Jackman. I'm in." People just love to be around. It's not just celebrity, it's talent too. And in his case, it's just a fundamentally wonderful human being. So we outgrew the gym we were in and said, "Why don't we start our own business, and we started the Dog Pound. And before you knew it, without exaggeration, it was the hottest gym in the world. Yeah. Taylor Swift's working out there every day. Justin Bieber's coming into town. I remember one time I came in, Giancarlo Stanton's there with his shirt off, swinging a gigantic sledgehammer on a tire, and I'm like, okay, I'm outclassed here.
That's crazy.
I'm out. I'm the old dad or granddad in this crowd. But yeah, that was a very, very interesting lesson for me and a fun period of my life. It lasted kind of 7 or 8 years. Dog Pound still exists, but I'm out of shape. I don't grind like I used to. But thanks for bringing that up. I forgot about all that.
No, of course. And, it's interesting because it kind of introduced me to, it was a good, it's nice when you have a bit of the personality behind the person or have a bit more of the origin story outside of everything that's within a professional context. But I mean, that tenacity and drive kind of mirrors, right? What Jeff at ICE, plucked you out and had you effectively build out this empire, right? And I assume that would have been the financial equivalent of Hugh Jackman saying, "Hey, come build this gym with me."
It was actually I'll come back to that. I want to come back to elliptically, but just to talk about you for a second, I have many memories of you in those days, but not of that particular piece. But I give you credit. I remember vividly talking to you in what was probably 2015, 14, 15. Does that sound right? Were you covering at the New York Stock Exchange in the boardroom? And you were just asking off-the-wall, zany questions, having nothing to do with the topic du jour, just belying an intellectual curiosity that I found
invigorating.
Attractive. I wanted to be around it. You're a fun guy and you cared about what was going on in the world. And so here we are, yada, yada, yada. 9 years later, we're sitting in a cafe in Brooklyn and in a whole new industry for both of us, probably going to ask each other a bunch of interesting off-the-wall questions. So I think credit to you, you've kind of found your best and highest use for that intellectual curiosity and general high IQ. Anyway, coming back actually to what you said about Jeff and ICE. So it was all at that Dog Pound time, and I actually give my wife tons of credit. She's my college sweetheart. We've been together since we were in our late teens, but she pushed me to get in shape, and I do think being in physical shape is really helpful for being in good mental shape, because the New York Stock Exchange, right around the time that I said, okay, kids are getting a little older, let me get in physical shape, I had to work 16 hours a day, or at least mentally be on 16 hours a day to go in and run the New York Stock Exchange. I didn't know anything about equities. I made so many mistakes in those early days. And if you're gonna make mistakes, you better realize it quickly. You better be on it. You better be working your butt off. And so it was all kind of happening for me at the same time. And when I look back at my career, it was miserable and it was really invigorating and awesome. I don't know if that makes sense to
No, it does.
talk about both those things.
I'm sure there's some parallels, and I don't mean this in a pejorative sense, but back when you were sort of plucked to run the exchange, I'm sure there were forces or people who thought that you might be over your skis or maybe too young. And at the same time, when you got into crypto, I imagine people from your old world probably were wondering, what is this guy doing? Has Tom gone crazy? And then probably people from crypto thinking, who's this suited guy who maybe doesn't know as much about crypto as I do, think he's doing as well. So,
I've had three, I'll call it kind of big roles for my station in life and my career. One was when I went in to run a major global futures exchange, the New York Board of Trade. One was when I went in to run the New York Stock Exchange at age 36. And then the third was when I went in to run a crypto business, which was relatively new to me, notwithstanding some prior experience. The first and the third were actually the most difficult and where I made the most mistakes. Like when I went in to run NIBOT, I was 29. It was a 140-year-old business. And I was quite smug. I almost there was too much fake it till you make it, trying to have the answer to every question, trying to pretend like I knew what was going on. I just didn't. I was 29. And so it took a while to realize, hey, just be yourself. Be quick to say you don't know. Have enough kind of confidence in who you are that you can have people around you who do all the right things. But that was a rough stretch. The reason why I ultimately was successful is because I had a boss who believed in me and was willing to let me make mistakes. And that's something I try to keep in mind all the time. Even today, when I have colleagues around me who make mistakes, I try not to be so quick to jump all over them. You have to let people make mistakes, learn on their own, develop, grow, obviously within reason. But that first experience was very difficult. New York Stock Exchange was relatively easier because it was a very similar experience, but on a much grander scale to having gone into this major global futures exchange. Yet again, it was an old world, a somewhat sclerotic, bureaucratic organization with lots and lots of layers and costs that wasn't responsive to customers. Well, I had a playbook because I had done that at the New York Board of Trade, so I was able to apply that at the New York Stock Exchange. Yes, it was distracting to be in the media every day and have Frank Chaparro showing up and criticizing when they did things wrong, or losing a listing to the New York Stock Exchange and seeing it in the Wall Street Journal. But the job was actually easier because I had gone through it. Then I went into crypto, and I was kind of
from an internal perspective is easier, more external forces and pressure.
Right, and I learned not to take everything personally. Like Twitter was terrible, and I thought it was just me at first, but I would go on Twitter, let's say we had the Alibaba IPO, or I do a CNBC interview, or maybe there's a Wall Street Journal article. Everything on Twitter was so negative.
Yeah.
So just negative. It's like, look at this fraud, Tom Farley, just terrible, terrible stuff. It's really a cesspool. And if you take it seriously, you can have a hard time. So that helped me with thicker skin. And I had a lot of good people around me, Stacy, John Tuttle, who both of whom who kind of kept me on track in those days, and frankly did all the work and let me look good as the head of the stock exchange. Then I go into crypto, and I was kind of smug for an entirely new set of reasons. To some extent, when I went into crypto, I looked down on some of the practices in crypto, which I think kind of hurt me initially. Like, for example, meme coins.
Yeah.
To me, it was like, hey, I'm not in this for this unserious stuff. I'm, almost like I'm above this stuff. And it took me a while to realize that it's all part and parcel. And today's meme coin is tomorrow's Bitcoin, or even today's meme coin is tomorrow's meme coin. But in the meantime, maybe it brought in 1,000 new people into the industry who are going to learn about how crypto works and the various layer ones, or maybe they're going to write software or smart contracts that'll be tomorrow's programmable finance.
Yeah, it's kind of the tip of spear for a broader business.
Right, exactly. It's the tip of spear to generate interest, generate enthusiasm, generate income.
But you could have a meme coin project sort of launch a DEX or launch a perp.
Right.
In addition to sort of having that more mimetic front end, so to speak.
Exactly. And some of these end up being businesses in the long run that are sustainable and will be here for 20, 30, 40 years, I'm sure.
Yeah, because there's some attractive IP, like, what is Disney but a meme coin of Mickey Mouse?
Yeah.
But there's a whole corporate enterprise.
Or even just look what, Bonk creates this meme coin. Oh, it's seemingly just this silly ephemeral thing, and then they build a business behind it, which is Let's Bonk, which is...
So you got bought into certain elements that you thought were maybe amateurish or sophomoric.
Yeah, it took a while. Or even I used to get so frustrated at the lingo, like people using the word staking in 5 different ways. And,
Sure.
And so I insisted, I will never use those words, but yet staking now has a very clear meaning in crypto, and it's a very valuable thing for people to participate in crypto. Anyway, I wish I could go back in time and change a bunch of the things I did, but live and learn. And so, I don't know, life is a collection of experiences. I'm having a blast in this current one, but it's really been those 3 have been the formative management experiences that I've had since 2008.
And I'm sure there's some sort of, you compare and contrast your first big role with your more recent one, and getting accustomed to maybe criticisms or people not understanding your position in market. One thing that I feel like crops up time and time again with Bullish is who's using this? Where are they trading? And recently you just announced the BitLicense acquisition. So that can help you gate crash and expand in the United States. Is most of the activity, has it historically been offshore or in Asia? Or, for people who are like, who's trading on Bullish, maybe enlighten them.
Right. Let me actually raise up even an additional level and describe Bullish at the parent level.
Yeah, sure.
And then you're asking specifically about the exchange portion. And also for the people listening or viewing this, on the Bullish side of our business, we spend $0 in marketing that brand. So it's perfectly reasonable for people to say, now wait, tell me more. I'm not too familiar with what Bullish does. Just as an aside, the day before our IPO, I was watching CNBC and they ran a teaser and they said, tomorrow, Tom Farley to talk about the high-profile Bullish IPO. And I thought to myself, high profile? When I talk about Bullish at cocktail parties, nobody knows what I'm talking about. So Bullish is the name of our parent company, and it's also the name of a very important business that we operate called Bullish Exchange. And I'll come back to that in just a moment. And then the other principal brand name that we operate under is CoinDesk and CoinDesk Consensus. So CoinDesk is a couple things. One, a data business that I'm really excited about. We have multi-token indices. Grayscale has just flipped public on a ETF, which is now the largest multi-token ETF in the world, which is based on...
So think S&P of crypto.
Exactly. CoinDesk 5 is the index, so think of it as the S&P 500, the Dow Jones 30 of crypto. Grayscale's ETF is now the largest multi-token index in the world. So that's a fun business, really fun, that I spent a lot of time working on. And then CoinDesk also operates a media business, which I like to say is the leader in crypto, but certainly a leader in crypto for media. Particularly big here in the United States, a little bit less so outside the United States. And then we have our Consensus conference business, really two tentpole events, one in Miami, that'll be in May of this year, and one in Hong Kong, that'll be in February of this year. Both of those are typically sold out, bangers, as the kids would say, but really cater to more of a sort of institutional audience as opposed to a retail audience. So if you go to those conferences, you'll actually see an occasional person wearing a suit, but not a tie. but never a tie, or they wouldn't be allowed. And then, so anyway, that's that kind of CoinDesk business. We wrap all that with a healthy balance sheet. We have $4 billion of roughly net cash and crypto, and a Deloitte as an auditor, and all these sorts of things. Going back to the exchange, which was the point of your question, we have rounding to 0 individual customers, meaning do we have a handful of retail customers that accidentally find their way to the exchange? Yes. But our customers are institutions almost exclusively. Like literally 99% of the volume comes from institutions. Ergo, therefore, we don't have to spend money on marketing. We know who those institutions are. We find them directly. They use us because we have really great liquidity at a really, really low cost. So the amount of money that we make might be in a particular month, 2 basis points, 3 basis points, 4 basis points will be the revenue to us, whereas well-known retail exchanges might make 200 basis points. So that's what we're known for, in particular in crypto's most important assets. So Bitcoin, ETH, Solana, that sort of thing. We only have operated outside the United States. We're open to do business in 55 countries. And as of recently, we now are open to do business in the US. And when I say recently, I actually mean yesterday.
Yesterday.
Yeah. So we're on a good track. We've just chosen to stay in that. You might look at it just as a kind of a common sense question. You might say, well, wait a minute, CoinDesk is well known. You have lots of retail. Indeed, we do. We had 48 million unique consumers of that CoinDesk content, whether it be the data or the media, last year, 48 million. So you'd say, well, geez, why don't you just open the exchange to retail? And we haven't foreclosed that option forever, but that's a tough business. It's very heavy marketing. It's a more difficult business from a regulatory perspective. You have to launch a credit card. The customer service needs are extensive. And the fees that you can charge are constantly under pressure as the market matures. We've seen this. You and I saw this way back when we met in 2016. In fact, retail spreads and equities were collapsing. We've seen it in FX. And so we've chosen to instead cater to institutions who care less about the fees as long as they're within reason, and more about latency, determinism, how good is your liquidity, how good is your custody, how good are you as a counterpart, will you lend to us? how credible is your regulatory footprint? Those sorts of boring things that my friends punting around crypto retail, they care less about.
Yeah. And so yesterday you posted on LinkedIn the update about, I think, was it your earnings yesterday? Was it the first earnings, or was it the day before?
So earnings, I've lost track of time, but we announced before the open on Thursday
of last week
that we had the BIT license secured, and we announced at the close of earnings our first quarterly earnings as a public company.
So you put out like a 2-minute video on LinkedIn. You wanted to keep it short and sweet, but maybe unpack some of the top line updates from the firm as part of those earnings.
Yeah, so we 1 minute, Frank. It was
1 minute?
It was 1 minute. I'm told you only have so much time when you post on social.
Yeah, you were like walking between meetings or something?
Yeah. So I don't know. I'm trying to get into this social game.
LinkedIn's good.
I was huge in it at the New York Stock Exchange. I felt like I was on my game. I had all these, whatever you call them on LinkedIn, connections or followers or whatever. And there's part of me that's kind of enjoyed being out of the game.
Yeah.
For the last 4 years.
No, because once you get back into it, it's like it sucks you in.
Oh, I get all these alerts.
Yeah.
And, so anyway, I'm gradually getting back into it. Only if it can be helpful to the business or our customers. But so far, so good. So we announced our earnings on Friday. Things are going well, just at a high level. We have a business that I didn't mention when I did the overview that we call liquidity services. It's super simple. Let's say you're a stablecoin, Ripple, PayPal, VanEck. We'll list your stablecoin. We'll provide liquidity. We'll make sure there's a bid and offer there. We'll provide visibility, advertising on CoinDesk. Something to do with consensus.
Flywheel.
And we'll create a subscription. Hey, 3-year subscription. Pay us some amount of money, and that business is really moving very well for us. And so we were able to so-called beat the analysts' expectations. Now, in point of fact, we were such a
because they weren't looking at that subscription business being so robust.
Right, and it really did quite well because of the momentum that we have. But it's 1 quarter, Frank.
Of course.
We're building this for the long haul. We don't over-index on it, but it was a good way to come out of the gates. That went well. Plus, there were some investors. We met 52 investors on our IPO roadshow face-to-face. We actually met hundreds in total, but one-on-one meetings, 52. One-on-one face-to-face or Zoom. 52 meetings, 51 placed orders. So it went great.
Yeah.
The one who didn't place order actually had a concern with our business that was the same concern that the first research analyst who published on us had, which is, I don't think you're going to get approval from New York State.
Really?
Yeah. And if you look at the New York State website, they've only given a couple BIT licenses since FTX had all its conflagration. And so there was some cynicism or skepticism.
What mollified their anxieties or quelled their whatever reason?
New York State?
Yeah.
I never was as concerned about it. I mean, I think a lot of knuckleheads show up to New York State asking for approval, right? I mean, it took time. They asked tough questions, but I never was overly concerned that we would get it. It was just a matter of when.
Yeah.
And we couldn't promise it to investors. In fact, my talk track was, I believe we will get it. And we're getting all the right signs. I even think we'll get it by the end of August or early September, which we did. But we won't promise this to you. So if you're looking for a promise, then we're probably not the investment in the IPO. So the fact that we were able to say, hey, we got the BIT license, we're going live in the US, we are indeed launching options in the 4th quarter.
That's right.
And in fact, we've already launched. Yeah, it's not even test trades. They're actual trades. Yeah, it's just a relatively small number of customers. I don't know the exact number, but round about 10. Don't hold me to that. And small dollars. Like the largest trade I've seen has been like $500,000. But we're live. The technology works. It's approved from a regulatory perspective. So when you put all that together, I think investors are like, okay, these people can manage a public company. So yeah, it's gone well. Public company life.
So shifting gears to look at the market, not necessarily from Bullish's perspective, but looking at the market writ large, there's a lot of interesting changes happening, whether we look at DATS or from a regulatory perspective, Clarity and Genius, as well as the new ETF listing standards coming into place. When you put your New York Stock Exchange ICE hat back on and you look at the crypto market, we could spend hours looking at what's missing from the market structure. It still seems, a guest who was on earlier today described it as a dark forest, right? Where there aren't as many standards tapping either public equity markets or public token markets can be different for each participant. There's a lot of fragmentation in the market, and there's still a degree, there's a lot of volatility. So what do you think, what parameters need to be in place to have a more robust, liquid market for crypto?
I wish I could give you like a really clear and profound answer to this, but I can't. I'll give you an anecdote. When we had our IPO a month ago, I was on the floor with Jeff Sprecher, and for those of the listeners who don't know who Jeff Sprecher is,
the swap king.
He's an amazing
sultan.
He's an amazing American entrepreneur. He bought a company for $1 that was failing. Fast forward, Intercontinental Exchange is the largest exchange in the world by market cap, and he literally bought it for $1. And we were down on the floor. And when our stock opened, and there's a whole nother conversation to have about perhaps hyperbole and how retail is integrated into the IPO process, our market cap was around about $20 billion. Mm-hmm. And this was coming on the back of an IPO. As I said, where 51 of 52 people put in orders. I think we were close to 30 times oversubscribed. In fact, I know we were. And so there was this ebullient mood. And Jeff and I were having this conversation. And I said, well, what do you think is the lesson of all this is? And he said, I got to go back to Atlanta and work on crypto. And while it was said in a lighthearted way, and we were joking, I think there's a lot of truth in that. I think the world has woken up all at once to, okay, this layer one technology in particular has evolved to the point where it can truly be the underpinning for something special, i.e., you can see major asset classes relying more on public blockchains, not for this kind of derivatized contractual bullshit where it's like, hey, we're going to have all this old world TradFi stack, and then we're just going to have something that points back to it.
Yeah, almost like a synthetic derivative.
Right, which is what we've had to date, and that's fine. It's kind of like I said, meme coins can be a good thing and tip of the spear. That was the tip of the spear, but the end point is using Solana as a listing, a token on Solana as the share of Bullish stock. And the share of Bullish stock is the token. It doesn't point back to, something that exists at DTCC or Broadridge or Equinity or what have you. So I think that's coming in large part because the layer ones have improved to such extent, in large part because of a couple reasons. One, the high quality of the layer ones and the choice of high quality layer ones. Number two, regulatory acceptance or getting there. Maybe not full acceptance, but getting there. And the thing I would point to is the Clarity Act, which is the market structure act that passed the House. It will likely not be the ultimate bill, but you can look in there for breadcrumbs, and they created this mature blockchain concept. And I expect to see that in an eventual market structure bill, and that could unleash the ability for regulators to say, cool, Bullish, you can list your stock on a mature blockchain, Ethereum, Solana, SWI, whatever those mature blockchains are deemed to be, or whichever of those mature blockchains. And then the third thing I think that unlocked all of this is stablecoins. And I'm convinced that everybody's going to have stablecoins in their pockets. I don't know about you, maybe it's just me, but I always have trouble moving fiat around. Like it'll be like, oh, just out of nowhere. Like I do a golf trip with my best friends from growing up, and I had to send one of them $500, and out of nowhere, PayPal was like, oh, this no longer connects. It's not integrated to your bank. You have to call the bank. I called the bank. I didn't get there. It took me a half hour. I still can't send money via PayPal. Like that kind of crap happens all the time.
Yeah, I have run into that issue with Zelle all the time, where I try to pay subcontractor stuff, and it's like, I once called Chase, and they were like, I said, if this doesn't work, then should I do it tomorrow? And I think the customer service rep said something like, I would just try to pay her some other way. It's like, well, this is insane. Like, I can't move my money. And stablecoins are just an order of magnitude more efficient.
They're so
That's why the
friggin'
banks,
easy.
I think, are so afraid of
Yeah,
it
yeah.
usurping or eating into the deposit business.
We were chasing, I don't know if I've told you this story, we were chasing the CoinDesk deal, and we were on a tight timeline. The seller, DCG, had some particular interest in closing the transaction on a tight timeline. And so there was a certain Friday by which we needed to not only sign the document, but fund it. And it got to the point where it was so late on Friday that we weren't going to be able to get them the
Get the
fiat
money.
because the Fed wire closes. And so we said, wait a minute.
So you showed up with briefcases of cash.
Briefcases of stablecoins. So this is DCG. And so we just said, hey, Barry, can we just zip you over some stables?
Wow.
And so we paid the entire purchase price of CoinDesk in stables.
And there was an element of the IPO that was funded.
We took all of our money in
Yeah.
the IPO. When I say all of it, substantially all of it. We got
Yeah.
some in fiat, but I don't know, 5%, 10%.
Interesting.
We took all of our money in stablecoins.
What was the sort of like, how did that get set up?
It was actually easier than you would think. So our banks, we had two.
So that means effectively like the Fidelities of the world.
No, let me describe
sure.
it. So we had three main banks. In this particular case, J.P. Morgan and Citi did not have a role in this. Jefferies was the official, let's call it payment bank in-out, and
Got it.
every IPO has one of those.
Yeah.
So what Jefferies did is they went and they set up relationships with the actual stablecoins, mint redeem ability, and we were able to introduce them all. I mean, these are all our friends and clients
Yeah.
and so on and so forth. And so they went around and they set all that up. So Fidelity handed USDs
Got
to
it, to
Jefferies.
Jefferies.
Jefferies minted the stables, and the only real issue was we took a lot of it on stables, maybe all of it, I don't recall, but certainly substantially all of it on stables running on Solana. And a couple of those stablecoin providers didn't yet have the ability to mint on Solana, or the custody providers weren't able to take the stablecoins in stables on Solana. And so we had to work to establish those rails as well. So there was a good amount of work behind the scenes. It was great. We love stables. Like, we can whip stables around 3-4 different places in the same day. It's much more useful capital to us than holding fiat. So I don't know what our cash balance is right now. Don't hold me to it. But let's say it's around about $1.6, $1.7 billion. My guess sitting here right now is that 1.5 of that we hold in stablecoins.
Interesting. Is there anything you can do with those?
Yeah, absolutely. Yeah, we treat much of our balance sheet we hold in just Bitcoin, and obviously Bitcoin has a relatively high volatility as compared to the dollar.
Yeah.
Certainly in dollar terms, the dollar has zero volatility, and so we treat our stablecoin balances quite safely. We don't go far out the risk curve. In fact, not at all. We do have a little sandbox, a small amount of that we'll deploy in DeFi to get a yield. But for the most part, we'll hold those stable coins. In some cases, we'll earn rewards or yield for holding those stable coins. It's a fruitful endeavor for us.
How else can you build out sort of like the capital markets component of the firm? And, whether it's like tokens going to market or facilitating transactions, is there anything outside of like exchange that you can do there?
I mean, we are already. That's our liquidity services. Like, for example,
That's basically what that is.
Yeah. For example, there's a new token. So if you're familiar with Midnight, it's this project. It's related to, but it's related to Cardano. Includes some of the same technologists and technology. But I don't know that spinoff is quite the right way of describing it. But it's more of kind of a permissioned blockchain. And we're working with them on the launch of that entire business, including the token. So
Got it.
we can sit down with them and say, hey, we can provide a listing, because this is a high quality group. This is a high quality project. We can provide a listing, we can provide visibility, we can provide the liquidity services. Yeah, we're doing that. We're doing that sort of thing all over the place.
What do you think in the next 5 to 10 years? We juxtaposed kind of traditional finance coming into crypto going into traditional finance. When a new entrepreneur is looking to tap public markets in 5 to 10 years, what does that look like? Does it blend together into one process, or will there be a more crypto avenue or route and a more traditional equity avenue or route?
So when we did our roadshow, we had these meetings, as I said, 52 one-on-ones and literally 100 meetings in total. That question that you just asked would always exhaust me when I got it because it's so difficult to answer. I do not know the answer. Like, if because people say, "Oh, well, what are you going to look like in the future?" And the first question in my mind is like, well, first, it's a little bit binary. Like, is there even such a thing as a crypto exchange 8 years from now?
Yeah.
Because if there is, I can give you an answer. Or, does it all meld into one? And that's where it gets really complicated.
Yeah.
And frankly, I think that's the higher probability. So if you look at CME, ICE, which owns the New York Stock Exchange, NASDAQ, London Stock Exchange, CBOE, Deutsche Börse, Hong Kong Stock Exchange. I think I probably just, even TradeWeb, I probably just hit 7 or 8 largest exchanges in the world by market cap. Among them, they have essentially no business in crypto.
Yeah.
The one exception is the CME has a nice Bitcoin, Bitcoin futures, some Ethereum futures, but really Bitcoin futures and options. Other than that, essentially nothing I'm aware of.
Yeah.
I don't know if you're aware of anything else. Well, in a world where TradFi and crypto is going to come together, as the CEO of a crypto market infrastructure business, the crystal ball starts to get a whole lot more hazy. Are we going to see more competition from them? What is that going to look like in the future? But to answer your question directly, my guess is it is a blend because I am a zealot that we are going to see major asset classes move onto blockchain, public blockchains. In other words, that will be the underpinning. You will see IPOs occur on Solana or Ethereum or a layer 2 on Ethereum, and they will be approved by regulators. They will be accessible by traders. So in that world, yeah, I think it all kind of converges, come together. And the reason why I say that is it's a pretty inefficient, like I ran, Frank, the largest equities exchange in the world, the largest options exchange in the world. You would think I would just think it was like the greatest thing since sliced bread. It wasn't. It's horribly inefficient. And it was sclerotic. It was very difficult to make changes. Layers and layers of intermediaries, obfuscation, lack of transparency. Good luck trying to figure out exactly what's going on inside DTCC or Broadridge. Not because they're bad entities. They're great. They're great. It's just they've been built up over 100 years.
Yeah.
So you move it onto blockchain, you get this step function opportunity. All of a sudden, there's fewer layers, less costs. That's good for free enterprise, more transparency.
So you do see blockchain adding an element of efficiency to U.S. equity markets than what exists today?
I do.
I remember.
And if it doesn't, then this is all a hobby.
Sure.
If it doesn't, then what is crypto other than Bitcoin?
Yeah, I guess like fixed income or some other. assets.
Other markets. Got it. Yeah.
But I just remember distinctly sitting in on an STA conference panel where Chris Kincannon made the point, and I agreed with it at the time. I don't know if I agree with it now, that U.S. equities are already the most robust and liquid markets in the world. He did not see blockchain adding an order of magnitude more efficiency or liquidity to the existing structure. But you're sort of painting, not to bring Chris into the conversation, but you're kind of saying that it might actually do that.
We could define order of magnitude, but U.S. equities are not 24/7 or anything close. If you have a Bitcoin position, whether you individually, Frank Sparrow, or an institution, you can't find a prime broker that will hold that and your NVIDIA stock together. You can't get portfolio offsets of those. You can't borrow against your Bitcoin in your securities account. So does it even require an order of magnitude of cost reduction in order to have an order of magnitude efficiency gain in the overall economy? I don't think so. But also, it's a lot easier for an entrepreneur to get going on a public blockchain. I just went through this IPO process. It's a nightmare.
Interesting, yeah.
I did 380 IPOs. 380 IPOs. I found this process very difficult. Very difficult.
Yeah.
And there aren't many people on planet Earth who have more experience than me, and I was confused as hell. Wait, why do we go do this? Why are these shares restricted? We have to file this thing. We have to pick 2 different transfer agents. Just crazy shit, Frank.
Yeah.
Whereas the blockchain, a lot easier. So does that unleash more innovation, more entrepreneurs?
So more from the issuance perspective than maybe the trading perspective.
Yeah.
But it's interesting. I would be curious to juxtapose like the listing process in crypto, which is very different from equities, right? You know, it's not like you're picking one venue or you have like that same book building process. I mean, it is similar, but I wonder, is there any lessons or standards from the equity listing process that maybe these crypto token projects could adopt?
Well, this is where I'll sound like granddad a little bit. Which happens a lot in crypto. There are some really good things. I hesitate to even say this, knowing your listeners, but there are some very good things about U.S. equities. You're talking about U.S. equities in particular, regulation in this country. And you have to go back and you have to ask the question, why does the SEC even exist? It's because fraudsters exist. And the securities regime for going public principally is intended to provide adequate disclosure to make sure that people aren't defrauded of their well-earned assets. And so one thing we have to be aware of is, okay, as we're going to the SEC or Congress and say, give us the ability to do more and more on a blockchain, we have to also say, and what is a reasonable amount of oversight that we can apply to make sure there won't be pump and dumps and
fraud, manipulation, and abuse.
Exactly. And clearly the current regime has gone too far, but we can't just show up and say, hey, because crypto has this libertarian ethos, like it should just be buyer beware and you shouldn't have any of this. That isn't going to work. And we've kind of proved in this country that it doesn't work. Now, was that 100 years ago? Yes, it was 100 years ago, but we have to find the happy medium.
Makes sense. Okay, so what are you most excited about for the next 6 months?
Oh boy, the next 6 months. I've just been dealing with the problem 6 inches in front of my face. So for Bullish, we're launching in the U.S. imminently today. We are doing our options launch. The multi-token index going really well. We're looking a lot at M&A. There have been a lot of crypto businesses that have been funded over the last 5 or 6 years. They've realized, hey, maybe we're subscale. Maybe we'd be better with a partner. Yeah, we have the stock with which to help do acquisition, but also cash on the balance sheet. So I'm spending a lot of money there. On the personal side, I have 2 daughters doing the rowing this fall, so I'm looking forward to some regattas, hopefully some fast races. And otherwise, we had our first board meeting as a public company today. It was my first meeting as chairman. I totally screwed it up. Like we didn't send the materials out in advance. It wasn't nearly as professional as I would have liked. So I'm looking forward to being a better CEO and chairman and just doing a better job over the next 6 months. What are you excited for in the next 6 months, Frank?
Finally getting this show off the road. It's been a huge slog with procurement, having to navigate different portals, which working at a regulated company versus a media company takes some getting used to. But I still have one more onboarding modular to go through. So I'll be an expert on KYC very soon.
Speaking of the dealing with the regulated environment, so the night before our IPO, I was scheduled to go on Squawk Box, which is a morning show, and it's hosted by good friends of mine, Joe, Andrew, and Becky, who have always been very good to me, even when I was younger in my career, and would do a terrible job on TV with them. And the lawyers came to us and said, if you go on Squawk Box tomorrow morning, we're stopping work on the IPO immediately. It's a regulatory violation for you to go on Squawk Box. It's before you're allowed to do it. You have to wait until after the market open. So I said, geez, I've never heard that before. That must be the case. Fast forward a week later, I'm looking, Mike Cagney is on Squawk Box the morning of his IPO. So yeah, being in a regulated environment isn't always fun.
Yeah, lawyers be lawyering out there. Tom, thanks so much for joining the program.
Yeah, good to see you, bud.
See you soon.
Thanks for having me on. Appreciate it.
Thanks for coming out.